The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com with the weekly perspective for the week ending June 19th, 2026. Welcome to this week's weekly perspective. This week is really about one word: uncertainty. Markets do not mind bad news nearly as much as they dislike uncertainty. And right now, investors are trying to digest multiple moving pieces at once: interest rates, geopolitical risk, energy markets, and the ongoing developments surrounding the U.S.-Iran memorandum of understanding. Let's begin with the Federal Reserve. The Fed left interest rates unchanged this week, maintaining a target range at roughly 3.5% to 3.75%. While the decision itself was widely expected, the message underneath the decision was more important. The Fed is signaling that inflation remains a concern and that rate cuts are not guaranteed. In fact, some policymakers appear more concerned about inflation reaccelerating than about economic weakness. Markets had hoped for a clearer path toward easier monetary policy, but instead received a reminder that the central bank remains cautious. Personally, I think that was more for theater. I do think that interest rates will be coming down, but I'll be talking about that more in the future. For current times, the result is a mixed market that continues to question the direction of both interest rates and economic growth. Higher for longer rates pressure debt-heavy sectors, commercial real estate remains under strain, and of course, government financing costs will continue to rise. Now let's turn to the Middle East. In just a few days, the U.S.-Iran reached a memorandum of understanding intended to reopen the Strait of Hormuz, restart energy flows, and begin a 60-day negotiating period on broader issues, including Iran's nuclear program. The agreement included provisions for reopening shipping lanes and temporarily easing certain restrictions while the negotiations proceed. However, the situation became more complicated. Planned follow-up talks were disrupted by renewed regional violence involving Israel and Hezbollah. Negotiations that many investors viewed as a step towards stability suddenly became less certain. While neither side appears to have abandoned the process entirely, markets are now questioning how durable the agreements are. For investors, this creates a difficult environment. On one hand, easing tensions could reduce oil prices and calm inflation. On the other hand, any setbacks in negotiations could quickly reverse the trend. Gold and silver have also felt this uncertainty. Many investors expected precious metals to move straight up during the Middle East tensions. Markets rarely work that way. Gold has already had a tremendous run, and silver remains in a strong long-term bull market. Corrections, consolidations, and trading ranges are normal, even healthy, during major secular bull market advances. What I continue to watch is the bigger picture. Global debt remains at historic levels. Central banks continue to accumulate gold. Fiscal deficits remain enormous, and governments everywhere face rising interest costs. None of those long-term drivers have changed. The short-term story is about uncertainty. The long-term story is about currency debasement, sovereign debt burdens, and a gradual shift toward tangible assets. In the mining sector, we continue to see investors frustrated by the lag between metals prices and mining share performance. This is nothing new. Historically, miners tend to be the last group invited to the party. Capital first moves into bullion, then larger producers, and finally into the smaller mining and exploration names. Patience is required. And once we move into the second half of June, I'll be watching four key indicators. First, whether the U.S.-Iran negotiations continue to hold together, which it looks like they are slipping away. Second, the direction of oil prices. Third, whether inflation data begins to surprise to the upside. And fourth, whether precious metals prices can complete their current consolidation and resume their long-term trend. For now, the markets are telling us that uncertainty remains elevated. In these environments, discipline matters more than predictions. Stick with position sizing, stick to your plan, and avoid letting short-term headlines dictate long-term investment decisions. Briefly on the Twitter account, great article from Zero Hedge. This one on Facebook was very interesting on the Wizard of Oz, a little on the esoteric side. Not very many people have seen it. It's a little out there, but I wanted to post it because it's definitely a different look at the Wizard of Oz. And I've looked at Bill Still's work on Secrets of the Wizard of Oz, which is very detailed about how the Wizard of Oz is all about moving to a gold-only standard. This is for Sound Money. As you know, I'm on the board. They post great stuff and some pretty funny cartoons at the time. So obviously you can look at some of my Twitter posts for the past week. I didn't post as much as I usually do, but I try to put stuff up that makes sense for your time. So I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.